everybody. Welcome to the November 18th, 2022 edition of News from the Front Lines of Business by D.W. Huff Consulting. I'm David Huff, CPA, owner here. I guess I'm in charge, I guess. I don't know. But anyway, here we are. It's Friday and another week in the bag. A lot of interesting stuff going on here. So we could talk about a couple of tax updates and whatnot, and we spent a little time on my second bullet point here on this crypto thing. Cause I'm just blown away by it. But let's just dive right in. So latest news from the IRS side of things is we got the newest version of the tax table. So they always adjust those things upwards for inflation. So you can kind of look at the brackets there and see kind of where you fall. The top section there is just the regular income tax brackets for individuals. So it's good to, I guess, keep it in mind. And I guess I think a lot of people sometimes will misinterpret this stuff, and they'll see themselves in the 22, 24% bracket and think that everything is taxed there. But just keep in mind the brackets are kind of a step kind of situation going on. So the first step is taxed at at the 10%. Next step is 12%. So it's just dollars within each of the ranges that are indicated there that are taxed at the corresponding rate. So let's take a look at that. Standard deductions pretty high. So looking at the married filing jointly down here in the bottom left-hand section there, $27,700. So that means your first $27,700 is not taxed at all. And then the next 11 is taxed at the 10% rate. So the rates are pretty progressive, and I think they could always be lower, but it is what it is. So okay, so this FTX collapse here. So this is mind-boggling. In case you don't know, this guy here is Satan incarnated here. This is the CEO here. So you've definitely seen his pictures all over the place, but he ran a cryptocurrency. So it's just kind of funny that it just came out this past week, because last week we talked about whether or not crypto was a Ponzi scheme. So this individual here has been taking money from people, and basically he ran an exchange. So what was supposed to be happening is, in addition to him selling his own coin, so this FTX company had their own coins. So just like Bitcoin or Ethereum or whatever it is, they had their own, and it was called FTT. That was their deal. So they had their own coin. So basically they were taking investors' money, like Tom Brady, Kevin O'Leary, some fairly famous people lost a ton of money on this deal. And they were endorsing it and everything else, but they would take their money. And so in addition to buying their own coin, which is self-dealing, and I'm blown away that people went along with that, but because it was a currency exchange, they were also supposed to be buying other people coins in Bitcoin and other different currencies and keeping it on their behalf. That was supposed to be an easier way to, I guess, as a clearinghouse, to have these documents. So you didn't have to actually have the cold storage, a little. You've probably seen some horror stories with this little thumb drive where you basically could take your currency and hold it offline. But that was kind of tedious, and it's very hard if you lost the password. So by utilizing these exchanges, it's supposed to be more, I guess, a more convenient way of trading the currency. But it's still not very usable. But it's still very hard to trade it and everything. But this guy was taking the money, and I highlighted a section here from this CPA firm, Prager Metis, because it's a decent-sized California firm that audited these financial statements, but totally missed this fact that there was nothing there. He made some huge political donations to people, bought all kind of property in the Bahamas, and now we're learning now that while this bankruptcy, he basically once the bottom fell out of it, he files for bankruptcy protection, and he moves some of the assets to the Bahamas, and so his government authority in Bahamas is now, pulling out some of the money before the bankruptcy court can even get involved and distribute his assets out. So the fraud just keeps going on. It just keeps getting worse and worse and worse. But essentially, he just took the money and in a bunch of sham transactions, didn't do what he was supposed to, didn't maintain the backup for the coins that he was supposed to be holding on behalf of clients, bought property in the Bahamas, made huge political contributions, made gigantic charitable contributions, and pledged money to all these charities that now are not getting any money. I mean, the more you read it, the worse it gets. So it's really bad, but you're definitely going to be seeing a lot more of that, and just know everything you read is probably even worse than it sounds. And on the tax side of things, so what happens if you lost money? So hopefully everybody here that's seeing this wasn't affected by it, but what if you lost money? So if if you're Tom Brady, and then side note here on Tom Brady, so you'll see some postings where Tom Brady apparently lost $650 million. And that's not entirely true. His net position had grown to a value of $650 million, but we don't know what his basis was and what it actually put in. But at one point, these inflated prices and this just nonsense had him with a net investment value of $650 million. That's now zero. But you do that. So let's assume you were Tom Brady and you lost some amount of money. Let's call it $300 million. Let's say maybe it doubled the time you put it in. You had $300 million that got lost. The crazy thing about this type of thing is that it's not always a good tax write-off. So you could have given $300 million. There's two different general tax treatments when something like this happens. Usually, it's a non-business bad debt. So if you are not in the business of lending money, so if you're not a bank or something like that, and you lend somebody money and they renege on a deal and you lose that money, you don't get to write off the whole amount that you lent them. It's treated kind of like a capital loss, so it goes through this little gyration on a tax return, but it's a really bad tax deduction because at the end of the day, it washes out to effect where it's a short-term capital loss, so you can use it to offset other gains that you have, but to the extent that that exceeds that $3,000 amount, the rest of it just gets carried forward for a while. So that's terrible. We've got no idea what kind of other gains Tom Brady may have had, but there's a chance that this guy's going to get of this $300 million loss, he might get a $3,000 tax deduction this year, with the rest of it going forward into the future to be offset against other capital gains. So that's a possibility. But there also is another possibility for casualty losses. So thanks to the Bernie Madoff Ponzi scheme, they do have a more favorable tax treatment, but it's got to be specifically classified as a Ponzi scheme. And now we're not sure if that's really the case. So as we look at some of these tax strategists that are talking about exactly what happened here, we don't know if it's exactly a Ponzi scheme because the money went into account, the owner basically stole it and misappropriated it. He bought other things, but it wasn't necessarily a Ponzi scheme in the exact definition of a Ponzi, where you're basically taking money in and giving it to other investors to make it look like they have a return on investment. That never happened. He just took the money in and just blew it. So it doesn't exactly meet the Ponzi scheme definition. So we got a problem. There's some big unforeseen problems there as this continues to shake out. So we don't know if there'll be some other special category because this is going to affect a lot of pretty large investors. So just like the Bernie Madoff generated a special tax treatment for Ponzi scheme losses, we think something like this might happen here. But your regular personal casualty losses, they've been taken off the table for a while now. So if you have a casualty loss from a federally declared disaster and things like that, you can still get it. But the normal casualty loss is gone now. So there's a chance that some people are going to be getting some really bad tax news, related to these losses. So wow, and I'm blown away. So keep watching it because it's going to definitely get more interesting as time goes on here. So anyway, so that's that. So COVID penalty relief. So we did get some notification here. You may have seen for the people who may not have filed a particular tax return for 2019 or 2020, I guess the IRS in their attempt to just kind of clear some of the backlog. If you file those things, the initial deal was if you filed it prior to September, they were going to waive all your penalties and just let you file a return and pay tax and kind of be done with it, because I guess they didn't want to deal with the abatement requests and all that sort of thing. But because of Hurricane Ian, they've now extended that. So for the people in Florida, they have an extension all the way into February, and everybody else has until the end of this month. So if you do happen to find yourself in a situation where a 19 or 20 return isn't filed, get it in quickly here, because the end of the month is sneaking up on us. So anyway, that's it. That's all the interesting stuff related to tax and accounting for the week. Closing thoughts though, funerals and weddings. So this past week, we just went through, I know you mentioned a couple weeks ago, my brother-in-law, AJ, died a few weeks ago, very unexpectedly. Everybody's still in shock, but this past week was his celebration of his life, and people got together. But as I'm kind of walking around and talking to people, and it felt good to see a lot of old friends that we hadn't seen in a while. But I'm just reminded this, I jokingly said to somebody, "Hey man, I hadn't seen you since the last funeral or the last wedding," and sometimes time flies by pretty quickly, and people that you hadn't seen in a while, you bump into them at a funeral or wedding, but you just don't see them outside of any major life event. So I don't know, I'm as guilty as this as anybody, but kind of feel like at times I need to figure out a way to just check in on my friends every once in a while and see how they do, and via, I guess, a phone call or something. I don't know, something besides social media, I guess, would be appropriate, because you just never know when your time's up. And anyway, so rest in peace, AJ, man. We're thinking about you all the time here, and I'm still in shock and saddened by it. So that's it, guys. All right, so have a good weekend, and enjoy this. We're having some cold weather here this week, but still nice. So enjoy it. Get out there, live your life, be good, and we'll see you next week.